Hi there, welcome to Kneppy Invest and welcome to July 2024. We have about 1 hour and 5 minutes left of trading time. Currently is 3:04 p.m. and a pretty good day in the market. To be expected because of the overnight session on Friday, not last night, on Friday night session in the United States, fairly favorable for us. So no surprises there. Now I am in between night shifts. So I stayed up to about 9:50 a.m. or so, and then I came back to the computer after waking up, and I went through all the announcements that were released after 9:55. Just because we are at the end of July, which means we are seeing quite a few companies releasing their quarterly reports, Appendix 4Cs or 5Bs, and some of these reports can be released during trading hours. And I think there were a few that were released after 10, interesting ones that were released after 10 a.m. So what is the agenda for today's video? We'll go through the best and worst sectors, indices, and also companies. And I probably assume there's going to be a few surprises in there. And then we'll have a look at the top 5 stocks of the day. I have come up with a list of the 5 that I want to talk about. A few of these companies were a little bit of a surprise. I didn't expect to be there. Well, maybe not didn't expect, but I sort of missed one of these companies' announcements, and I saw the share price down a fair bit. I went, "Oh, what's happening there?" That company is Fletcher Building, and then we'll have a look at a few charts, a few of the Appendix 4Cs and 5As that did not make it in the top 5 stocks, and then we'll have a look at some comments, including someone's telling me to stay away from Alcidion. So we'll have a look at that particular comment. Someone's getting a little bit touchy, a little bit emotional, and that is actually telling. Don't become too emotional when it comes to companies you own. Okay, so let's have a look at the ASX today. And first, we'll start off with looking at sectors and indices, and everything's in the green. In fact, the worst performing sector today is staples, up 0.49%, IT 1.28%, and utilities 1.28% up. Telecommunications, another good day, so more than likely Telstra's had a good day. In fact, most companies have probably had a good day today. Even gold's had a good day. Gold's up 0.8%. We'll see if any indice is down. I'm assuming no. No, worst performing indice is emerging companies. That always seems to be the worst performing indice, emerging companies. So that's companies with a market cap between 350 and 600. Someone did try to explain to me why that could be so. Like a lot of mining companies are in that list. Anyway, let's have a look at the ASX 20. And I would assume most companies are up. I would say maybe 3 down, 17 up, and 2 down, 18 up. And unfortunate if you are down today. ANZ Group is down 0.57%. Not sure why. There's a little bit of negative sentiment in ANZ Group today. Fortescue down, and that is a little bit more believable because the sentiment in Fortescue is absolutely shot right now. And the best performing companies in the ASX 20, REA Group, WiseTech, Aristocrat. I actually have not surprised about the performance of those 3 companies. In fact, I would say those 3 companies are probably the highest quality companies, maybe alongside Goodman Group and CSL. Can't forget CSL. So those 5 companies are probably the best quality companies in the ASX 20. And if I had to choose any 5 companies within this index, those are the 5 companies more than likely I would pick. Possibly depending on the valuation. WiseTech and even REA Group's valuation is quite high right now, so depends on valuation. Okay, so let's have a look at the best and worst performing companies today. And hopefully there's a little bit of surprises in here. And so let's start off with the top gainers by percentage change. A company called Nutritional Growth Solutions, says it's an ETF. I have a feeling that company is either going through a consolidation. Yeah, that looks like the code is a consolidation. Sometimes when you see ETF sector, that could mean it's a recent listing or listed today, but that's not true. Nutritional Growth Solutions has been on the ASX, and the ticker code is NGS. So we're going to have a little check what's happening with this company. And usually if they do trade under this sort of ticker code, it's because they're doing consolidation, something like that, and we can just confirm it. A lot of announcements over the last week. Let's go back. Yep, there it is. Update consolidation split, NGS, 12th of July. Okay, so they're going through a consolidation right now. Pretty sure it's consolidation, not a split, based off where the share price is. So let's move on. Company called Gull Iron, up 28.5%, but it's on pretty low turnover. Same is true with Audalia, and probably same is true with Burley, even Tas Food. So most of these best performing companies are on pretty low turnover, so fairly bit of noise, or fair bit of noise. Company called Nuchev did release their Appendix 4C after 10 a.m. I'm pretty sure it was after 10 a.m. And the market likes it. I had a look at it, quick look, and yeah, it was okay. It wasn't an amazing Appendix 4C. So I'll probably have to have a quick look at this particular. Actually, no, let's have a look right now. That's the whole reason I go through this process is to do this exact thing. Why is the share price running up? And I do know they did release their Appendix 4C. Cash receipts almost 2 million. Year to date, 10.6 million. So if you look at the year to date and this particular quarter, it's an actually underwhelming quarter in terms of receipts because they did generate $2.5 million on average per quarter, and company is operating cash flow negative. Made an acquisition, looks like. So not a horrible quarter, but not the sort of quarter I thought the market would get really excited. So there could have been something in maybe in the commentary that did get the market excited. Maybe. But yeah, anyway, so let's have a look at the chart for Nuchev, possibly one to put on the watch list. And another reason I go through this process is I'm looking for companies that are potentially, or not potentially, that are breaking out. Is that true for Nuchev? Well, no. Well, that's the answer right here. No. Bit of interest in this company. Like a month ago, share price actually rallied from about 11 cents up to 35 cents in less than a month, and then has pulled all the way back to 18 cents, even after a nice rally today. So fair bit of noise in there, fair bit of volatility. Let's move on. So it's maybe not really. Why is it doing that? In fact, look at that long-term chart. This company's share price has dropped from over $3 down to 18 cents. And yeah, there is a reason why I'm not following this company right now. And I don't really know what they're doing, and the chart tells. Okay, so let's move on to another good performing company, Biome, which I have included in my top 5 stocks of the day, up 16%. They did release something today that I do like, and I wish all companies did. So I'll talk about that later in the video. A few other companies here, not that exciting. BeforePay, not the sort of company I like at all. So this is, particularly if you're into ESG, BeforePay is a horrible sort of business model. Get your pay before you actually really should receive it. Anyway, I'm not the biggest fan of that sort of company, but share price up 12.4% on the back of their Appendix 4C. So I shouldn't be too biased. I want to leave my biases out of this particular video. So I am biased against that company, but the market does like it. So let's have a look at this particular company, BeforePay. So I'm pretty sure the business model is you're a worker, you're getting your weekly or bi-weekly or fortnightly pay in 8 days, and then you go to this company, say, I need some money, can you help me with that? And I'll give you $500 if you give me $2,000 now, something like that. I don't know. Anyway, so the market has like this particular Appendix 4C. The company achieved a net profit before tax of 1.4 million, an EBITDA of 2.7 million. So the company is profitable. So they are generating business. And maybe in these sort of times, this company will do well. Receipts of customers, 186 million, and operating cash flow positive 1 million. But I think receipts from customers, you have to look at that particular number with a grain of salt. So I didn't really go through this particular announcement. So talking about advances, that's probably what it's called, advances. Good word, BeforePay, advances. So people want to advance on their pay. That's BeforePay, advance on their pay. So this is telling us that advances are growing. Average advance is 374. It's not a lot. It's not a lot at all. So this company looks like it's catering towards sort of the lower demographics. Because if you need $374, lower demographics, maybe the younger generation as well. Anyway, So if you like this sort of company, the potential, maybe you think advanced paying or whatever you want to call it has a significant future, maybe this is a company for you. Not the sort of company I would typically look at, but let's have a look at the chart. Is this a breakout? Well, funny enough, the share price of this company has been going sideways for about 2 years. This is a sort of chart I will look at when I see a long consolidation period and I do wait for a breakout. Today's chart is, well, today's price action is interesting. Share price was significantly higher not that long ago, got to a high of 82 cents, so hasn't pulled back all that much, but within this consolidation phase, you get to see a little bit of volatility in there. And the other probably interesting thing is each each significant low is a little bit higher than the previous low. So there is a little bit of a sign of a very slow uptrend within this consolidation period. I guess that's before pay, no interest for me. Now let's have a look by market cap. There'll be a few interesting companies here. Clarity, I'm happy I took a position in that company recently. Drone Shield, a lot of volatility there. Step one. Now they did release a good trading update not that long ago. Other companies that released anything today? Nothing. Oh, Credit Clear. So up 11.3%. They did release a profit upgrade. Oh, it's a weak profit upgrade. When I say weak, it's weird wording, weak. It's not a really strong profit upgrade. You'll see why when I talk about this company in the top 5 stocks of the day. Yes, it made it into the top 5. So I'm happy that company is in this list. And talking about consolidation phase, Credit Clear has been, or share price has been consolidating for quite a few months. My only problem with Credit Clear is the valuation has a market cap above $100 million. If the market cap of this company was, say, 20 million, I'd probably be really interested. And that's it. Okay, so let's have a look at the worst performing companies today. And a company called Donaco International, which owns casinos in Vietnam, Cambodia, somewhere like that, down 23%. I don't remember this company releasing anything. They might have released something late on Friday. Let's have a look. Is that late Friday? 26th? Yep, at 5:55 p.m. That is the definition of late. Call activities and cash flow reports down 21%. So obviously the market didn't like this. So let's have a look. So I'm pretty sure the casinos they own are in Vietnam and Cambodia. Might be a little bit wrong there. So let me just check. Oh, that's the wrong part. Here we go. Yeah, DNA Star Vegas, situated on the Cambodia-Thailand border, and another casino in Vietnam. So, yeah, sort of right. Vietnam, Cambodia, but Cambodia-Thailand border. Okay, so why is the market panicking? Well, maybe not panicking. There might be a reason behind this. Receipts to customers, 11.4 million. Operating cash flow, positive 1.3 million. It could be the fact that they weren't that highly operating cash flow. Only 1.3 million. When you look at the year to date, operating cash flow positive by 14.7 million. That's a fair amount of operating cash flow in a year for a company with a valuation of, I'm assuming they have a value, it's right here, valuation of $37 million. At one point in time, this was a bit of a, I wouldn't say market darling, but there was a fair bit of interest in this company. And I'm thinking maybe back in 2014 or 15. And then COVID-19 destroyed this company because casinos. And it was probably destroyed way before that. Yeah, it was destroyed way before that. But the share price of this company got as high as $1.60. When was that? That was in, 2014. Over 10 years ago. I still remember that. And why do I remember that? Look at the rally in the share price. So this would have been after they listed. Share price in this company went from 35 cents to $1.60, and I still remember that. And yeah, I'm a little bit surprised that the sentiment came out of this company fairly quickly after that, 2014-15. But yeah, haven't really been following this company all that closely. Casino, but in saying that, and the other thing is, I just don't like investing in companies that have operations in that part of the world. It's just me. And not my personal experience with those sort of companies, particularly in China, but those companies that do list, Chinese-based companies that do list in or on the ASX have had a really troubled past. talking about maybe 5 or 6 years ago, there were maybe 5 to 10 Chinese-based companies that list on the ASX, and none of them are in existence anymore. And I do think there was a problem. I do understand why they would want to do that. They want to get their money out of China. A lot of the richer people in China want to get their funds outside of China, and this is a vehicle for a way for them for doing that. Anyway, let's have a look at the chart for Donaco. It's really not doing anything. There is a bit of a floor, share price floor at about 2 to 3 cents, and that's where the share price is right now, at 3 cents. So this could be peak pessimism in the company. Share price could be hitting a floor, that sort of thing. But yeah, I have no interest in Donaco. But just because I don't have an interest doesn't mean you don't have to. But share price down 23% or 21% today. Anything else here? ECS Botanics, company that had been releasing really good Appendix 4Cs, but I don't remember. They did. I completely missed this one. So I completely missed. So sometimes I will miss these reports. So this was a company that was releasing interesting, and on the surface, okay to even good Appendix 4Cs. So obviously the market has not liked this particular Appendix 4C. I'm just going to open up my spreadsheet because I have not put this in. ECS. Just take your time. No need to rush. Yeah, so nice increase in receipts from about $1 million in late 2021 up to $6.5 million in the December quarter last year. That dropped to $4.4 million in the most recent quarter. So let's have a look at this particular Appendix 4C for, that's Donaco. I was going to say $11 million, looks or sounds a lot. And this is a marijuana company, or hemp company, or whatever you want to call it. What do they call it? A medicinal cannabis, medicinal cannabis cultivator and manufacturer. Anyway, so let's have a look at the cash receipts. 4.1 million, and the company is still operating cash flow positive. So 4.1 million, and let's go back to my spreadsheet. 4.1 million, so it's another drop in receipts. So 2 drops in receipts for this company. All right, so ECS Botanics is down. Let's have a look at the chart for this company because it's a little bit interesting, I suppose. A little bit interesting, and yeah, the charts. Yeah, it's a very chart. Although the share price is at the lows we saw. This company saw back in June 2022, and that's at 1.4 cents. It's getting towards 1 cent. I don't like companies' share price below 1 cent. There's a company called Babylon Power and Pump. I had a look at their Appendix 4C today, and I went, oh, that looks really interesting, the cash flow and the operating cash flow. And then I had a look at the share price. I went, no, move on to the next one. And I'll actually talk about that company later in the video. Okay, let's move on. Talga Group did release their quarterly report today, down 16.7%. Not a lot of cash receipts, and that's sort of understandable for this type of company. But let's have a look at the chart. Market hasn't liked it, and chart has been in the doldrums recently and continues to be in the doldrums. Share price in a well-defined downtrend, and today the share price has reached a long-term low. So no interest in Talga Group at all. Anything else here? Oh, EZZ Life Science. Probably a bit of panic selling, I would assume. Let's have a look. EZZ. Share price $1.75. No announcements from this company. And I'm assuming EZZ, this selling is just had started with a bit of profit taking and a little bit of, I wouldn't say panic selling, but people getting a little bit wary. Share price has dropped in the past week, but share price had run up a lot the last 3 months, had been a triple bagger. Possible buy the dip situation here for EZZ Life Sciences. Just possible, not a really attractive one-day candlestick, however. So selling has remained volume. It's not massive volume, but I do have to be a little bit wary. But I think this is just, I wouldn't be selling now. I am a shareholder of this company. I wouldn't be selling now because I think there could be a bounce, a really significant bounce in the next few days. Don't know. And it's getting cheaper now. This company is actually looking really cheap, or cheaper, because they do have a fair bit of cash on hand, and the market cap's not that high anymore. It's like 80 million with the amount of cash on hand. That means the company has an enterprise value of 30 million, something like that. No, 50 million, I think. Let me just confirm that. Just want to confirm because I have a fair bit of cash. Let me just confirm that. And I'd say the market cap now is, 77 million. 77 million. It was well over 100 million before this little drop. And the company has operating cash flow positive 4.5 million, by the way, in one quarter. And they had cash on hand of 19 million, which means the enterprise value of this company is around about 58 million. For a company with operating cash flow of in one quarter of $4 million, I won't be rushing to sell this company. I just think this is a little bit of noise, just noise. So it's not on the back of anything bad happening with the company. Betmakers, I have a feeling Betmakers released their Appendix 4C. I'm pretty sure they did, and I saw it and moved on. And Betmakers last quarter released, I thought, an interesting Appendix 4C. So if you go back 1 year in ComSec, so I was interested in this company when they released their March quarter Appendix 4C because it was operating cash flow positive. I went, this is a step in the right direction for this company, but I need to see it replicated. So they were operating cash flow positive by over $1 million. And this was the first time this company had achieved that possible inflection point. So I just wanted to see if the company could replicate it. So I opened up the Appendix 4C. I was interested in this one. I went, let's see if the company was or is operating cash flow positive again. And the other thing I'd like to see is receipts climbing. Receipts aren't growing all that much or all that quick. And of course, ComSec is taking 5 years to open up this particular announcement. And of course, I go straight past the commentary, and companies' receipts were flat, not much growth, and operating cash flow negative. And I think one of the reasons why maybe the share price has sold off is because of that. Maybe some investors bought on the last Appendix 4C because they were operating cash flow positive, and the share price did start to rally after that. Or was it at the end of that? Yeah. In fact, the share price reached its high just before they released their Appendix 4C last time, and the share price just could not rally any further. So the chart looks negative. However, the share price is at a support zone. Yeah, support zone right there, which is pretty obvious why it's a support zone. Share price has really struggled to get below that level. But as some say, the more times the share price hits a certain level, the weaker that level becomes. So if the share price falls below about 8 cents, that could be negative for Betmakers. And what else is on this list? Nothing. So let's have a look by market cap. And there's Fletcher Building. I did see the company release an announcement. Now I just went straight past it. And then I saw the share price down 6.15%. I went, completely missed that. So I have included Fletcher Building in my top 5 stocks of the day. I had to kick one company out. And I might talk about that one company quickly, a company called Indiana Resources. They released an interesting announcement, and then the reaction from the market was interesting. Oneview Healthcare released their Appendix 4C. Don't understand why this company has a market cap of 250 million. I just don't understand this company at all. And let's have a look at their Appendix 4C. I had a look at their cash receipts history. Not much growth, if any growth at all. Let's have a look at my spreadsheet. I've been tracking their cash receipts for quite a few years. Here it is. So going all the way back to July 2016, $1.3 million receipts, and this quarter, $1.6 million receipts. So in a way, the company has not grown the receipts in 7 years, or 8 years. 8 years. So receipts has fallen the last 2 quarters. Now, the receipts are quite lumpy, but if you do a graph of their receipts, very little growth there. So I just don't understand why the market loves this company. Market cap 250 million, and this particular quarter, we already know the receipts are fairly low, and they are burning through a fair bit of cash. $3.2 million of cash in this quarter, $5.3 million so far for the year. This is in euros, by the way. And then if you have a look at the chart, at one point in time, this company was absolutely beloved by the market. And even now, the share price is in a nice little uptrend. Not sure why. They're not really doing anything financially. A lot of volatility in here. And yeah, going back, 2016, share price of this company got as high as $6. I still remember that. Going, why? I don't understand. I would say the shares in issue have increased significantly since then. So the market cap might not be that much lower now. I'm just assuming, by the way. You can easily actually check this. Just go to FinChat. This is what I do usually. Oneview. I think is it called Oneview? Yeah. And on the top here, on the right-hand side, in FinChat, they have a price drawdowns, percentage change, total return, and market cap. And you can go back 10 years. So in 2017, this company had a market cap of, it got to a high of about 370 million. Now it's 260. So shares on issue of this company have increased significantly. And there is a way to see that as well, somewhere here. I can see it somewhere here. Here it is. Total shares on issue have, here we go. I put in a little graph. There it is. It's gone from 26 million in 2014 to 680 million in 2023. That's why the market cap hasn't changed all that much. Even though share price has dropped from $6 down to where the share price is now 37 cents. There's been significant dilution over the past 7 years. I'm not even sure why I'm talking about it. A few other interesting companies here: Cyclopharm, Findy. Findy's pulling back a fair bit. Airtask, I don't think they released anything. Impedimed did. It's another interesting story of a company who just can't gain traction. Can't gain traction. And what I mean by can't gain, I'm not going to open up their Appendix 4C, but I'll just show you the cash receipts. Cash receipts are growing, but at the minuscule rate, very slow rate. So I started tracking receipts for this company back in 2013. So we're talking about 11 years ago, and they got above $1 million in receipts in July 2014. So 10 years ago, it's up to $3 million. And if you do track, you can just see a very gradual, slow uptrend in receipts, but it's really slow, and the company is still burning through cash. So no interest in this company until they hit that point. And if you actually do have a look at the long-term history of Impedimed, this is another company that was at one point beloved by the market. The share price of this company got as high as $1.70 in 2016. And the reason I know this company is Impedimed and Nanosonics both made it into the ASX 300 at the exact same time. So that would have been maybe 2015-16. So I started tracking both companies' fortunes after that. And I actually made an investment in Nanosonics, but not in Impedimed, simply because of the financial state. And you can just see it's been a really bad investment since then. And right now, share price is in a horrific, maybe not horrific, that's probably over dramatizing it, but it is in a downtrend. Okay, so I've really gone on with the ASX today. So quite a few companies that I was not going to talk about. In fact, a lot of the other companies I wanted to talk about, I've already talked about. Three. I've talked about three, have not talked about another three. That's Indiana Resources, Babylon Power and Pump, and Fineos. Okay, so let's get to the top 5 stocks of the day. And we'll start with Fletcher Building, one that sort of surprised me. Share price down 6%. Not the highest quality company on the ASX. In fact, I'd say it's in the lower quality spectrum by far. And they released an announcement that I usually miss. In fact, it was not marked sensitive. Fletcher Building provides Golden Bay shipping update, and this is a significant mistake by whoever decided this was not market sensitive, because it was price sensitive. The reason I found it was because it was one of the first, if not the first announcement released today, and I hadn't filtered announcements at that stage. So what do I mean by filter? So if you go to tools here in ComSec, go to company announcements, BHP is there, and then if you don't filter, you got 507 events, and it takes a while for ComSec to put all these stupid announcements in. But anyway, if you don't filter, you get a lot of announcements that are just too many announcements. So you really want to filter. You really, really want to filter. So I just filter by market sensitive. So it drops the amount of events from 507 to 245. And Fletcher wouldn't be on this list if I was just looking at market sensitive announcements. And I did see it. And one of the reasons why I bypassed it was because it was not marked price sensitive. Then I saw the share price down. I went, this announcement probably is price sensitive. And it is. Yes, it is. So let's have a look at this particular announcement from Fletcher Building. Is this an overreaction from the market? Because the title doesn't sound that worthy of a drop. Fletcher Building provides Golden Bay shipping update. I didn't even realize Fletcher Building was in the shipping game, but I don't know. Anyway, so apparently there is some sort of issue. It says Fletcher Building's Golden Bay cement business is currently experiencing operational issues with the marine vessel Aerotrol chief, whatever. which is owned and operated by a third-party provider. So something's happened with this ship. And I thought, oh, so what? And then I went further down the announcement, and this does have a fairly big impact. Fletcher Building's preliminary assessment is that it expects the impact on financial year 25 earnings due to the disruption to be in the range of $10 to $30 million, driven by the anticipated increased cost of supply from the range of mitigating actions expected to be adopted by it. So that's a pretty big impact for this company. And I was like, why is this announcement not marked price sensitive? And you can see the market has reacted accordingly. Now, in saying that, not the sort of company I do follow all that closely, even if the share price is sort of breaking out. And right now, the share price is in a massive funk. I think it's been in a massive funk for years. In fact, the high in this company's share price was way back in 2007. So this is definitely, just by this chart, this is not a high-quality company. This is not the sort of company you put in your portfolio and hold forever. In fact, the share price is nearly at a 16, almost 20-year low. Yeah, almost at a 20-year low, not the sort of company you want to have in your portfolio. So that's Fletcher Building. Coming in at number 5. I'm sorry, it pushed out Indiana Resources. I'll talk about that company in a second. Well, maybe not a second. Do you know Jiffy is an actual word, a scientific word? Yes, Jiffy is a scientific word. It's the time taken for light to move 1 Fermi. I think it's 1 Fermi. And a Fermi is the diameter of a neutron. Fermi. Neutron or electron, I forget. I'm not a science person. Size Jiffy. If you had to put Jiffy. Yes, Jiffy is a time. Look, Jiffy time. The time it takes for light to travel 1 Fermi, which is approximately the size of a nucleon. 1 Fermi is 10 to the minus 15 meters, so a Jiffy is about 3 times 10 to the minus 24 seconds. So when you say, I'll be back in a Jiffy, you are a liar. You will not be back in 3 times 10 to the minus 24 seconds. Yeah, so Jiffy is an actual scientific word. Yes, Jiffy is a real unit of time. There you go. So, bit of science there for you. I always say I'll be back in a Jiffy, and yeah, I'm a liar. I'm always a liar. Okay, so let's move on to the next company, which is Korvest. Okay, Korvest, yeah. Korvest released their results last Friday. Share price up 4.9%. Market likes it. I had a look at it, very quick look, and I was like, will the market like these results? So let's have a look at Korvest. This company has been on the ASX for 50 years. I think even over 50 years by now. And the market cap of the company is just above $100 million, so it hasn't really grown. But if you do have a look at the last 10 years and the revenue has really grown nicely in the last 7. Before that, drop in revenue. So this company might be cyclical, and right now it could be heading towards the top of the cycle. Don't know. And the company did release their results, and everything was down. So obviously, with the share price up nearly 5%, the market expected this. I don't remember if the company released any guidance. I could be completely wrong. Let's have a look. We'll go back 1 year to see if they did release any. No guidance at all. Maybe in their half year, they did release some guidance in that. But yeah, not a lot of price-sensitive announcements from the company. In fact, the most recent price-sensitive announcements was the half-year results in January. So this company doesn't release much. Very quiet. So I just wanted to see if the company did release any sort of guidance in this particular. I should have done this before I actually. Here we are, outlook. Yeah, no numbers hit at all. So the market obviously expected results or the numbers to be down. So revenue down 4.3%, profit down 1.2%, earnings per share down 2.1%. Always have a look at the financial statements, no matter what, no matter whether I like the company or not, because you might find something interesting. And I do go through these fairly quickly. I'm just looking for something that might stand out. So in the profit and loss statement, you don't have a lot here. And in the balance sheet, I'm just looking at like total equity. It's up to 53 million. I'm looking at debt. I'm looking at changes in working capital, which is inventories, receivables, and payables. And the reason that's important is I usually start off at the cash flow statement, which is right here. And sometimes you will see significant changes in operating cash flow, but that could be because of working capital. So for this company, the operating cash flow actually fell by about $4 million, but it's still $10.35 million. Capital expenditures $4.5 million. So the company was free cash flow positive by about $6 million for the year, but they also paid $7 million in dividends. So cash on hand actually did drop. So when I look at this, I'm like, no, yeah, it's a worse year than last year, but I think the market expected it. I have not had a look at their investor presentation. I'll probably do that tonight, I think, and probably have a look at their press release as well. But I was just interested to see how the market reacted, because on the surface, the results look weak, but it's not the results that matter. It's how the results compare to expectations. The other important thing is if the company put out any sort of forward-looking statement, any sort of guidance for the next year, I'm assuming no. I would assume no. I'm just going to have a look at the media release. Another reason why the share price could be up is dividends. Maybe they increased their dividends. I can't see if they've increased it. Yeah, they have increased it from 35 cents to 40 cents. So dividends have increased. And another thing to read is just the commentary. How's the vibe in their words they're using? So straight away, despite the rising cost environment and the temporary lull in major project activity, Korvest achieved near record earnings. Well, it's still down from last year, but I suppose it is near record. So no sort of outlook. Here we have an outlook. So this couldn't be another reason why the share price has rallied today. The outlook for the infrastructure sector remains buoyant. Korvest also sees improving opportunities in the data center market. This could be why the market is rallying, because they've used infrastructure sector, data center market, and has enhanced its product offerings to service this growing market. The day-to-day market grew in financial year 24, which offset a significant portion of the reduction in major project revenue. Interesting. They also mentioned here updated trading conditions at the company's annual general meeting. Okay, so I have not really thought about this company in terms of infrastructure or electricity infrastructure, that sort of thing, and also data center. So there is a possibility the company has pivoted. So I'm going to take a closer look at Korvest. So really happy to include Korvest in the top 5 stocks of the day, just because of that. All right, coming in at number 3, we have Credit Clear, who released a quasi-profit upgrade. They called it an upgrade. They also released their Appendix 4C. Probably should not ignore that as well. So financial year 24 results, guidance upgrade. I went, ooh, that's exciting. Share price up 13%. And I'm going to call it, the reason I'm calling it a quasi upgrade is because they did release guidance recently, and they said revenue would be between 40 and 42 million, and EBITDA would be in excess of 3.7 million. So today they've announced that revenue would be 42 million, which is in that range, 40 to 42, and underlying EBITDA would be $4 million, which is in excess of 3.7 million. So in a way, it's not really an upgrade. But if you look at the worst case scenario, yeah. If you compare it to the worst case scenario, revenue, worst case scenario, 40 million, 42 million. Worst case scenario, underlying EBITDA, 3.7 million. And they came out with 4 million. So quasi upgrade, but yeah, it's a long stretch. And they also released their Appendix 4C. Now, this company, I do like. Bill have compared it to Credit Corp. I'm pretty sure that's a little bit unfair on Credit Clear, but it's in the same sort of space. I'm pretty sure they do receivables or something like that. What do they call it? Receivables. Developed a digital billing and communication platform that helps organizations drive smarter, faster, and more efficient financial outcomes by changing the way customers manage their repayments through a user experience. So they're talking about receivables, that sort of thing, I'm pretty sure. I know, so not quite the same as Credit Corp. They buy debt. This company's not buying debt, but they're helping organizations, manage their repayments. So it's not really the same thing. Sort of a little bit subtly different. But still, I like the company, and I like the trajectory the company is on. receipts are growing, and not only that, the company is operating cash flow positive. And in this quarter, $1.8 million operating cash flow positive, $3.6 million for the year, free cash flow positive. My only gripe about this company is valuation. The company has a market cap of about $120 million. If this company had a market cap of $20 million, I probably would be a shareholder right now. So $121 million. So there is a bit of a, so if the company had a market cap of $20 million, there is not much downside. I could see a downside from here, particularly if they struggle during a period, share price could pull back. But in saying all that, share price has been consolidating. Share price has been consolidating for a few months. So that's the weekly chart. So let's have a look at the daily chart. Share price has been consolidating since February when it did break out. And today sort of is almost very close to a breakout. A couple of concerns. There has been a little bit of selling, but the share price at 29 cents is right on the breakout level. That was a high as we saw, or this company saw back in late February. Not as high volume as I would like. I'd like to see really high volume. I'd like to see highest volume we have seen in the past year. And the reason that would be good, that would tell me that the market, fund managers, they're interested in this company and they're buying on the back of these numbers. So in this particular upgrade. So definitely a company to put on your watch list. And I'm pretty sure I have 20 for 24. So I do like this company. I've already got it in one of my watch lists, which is 20 companies I'm looking at for the whole year. And I'm going to put it on my watch list that I look at every single day. Okay, so that's Credit Clear. Coming in at number 3. Coming in at number 2, we have Biome, up 13%. This company released something I love to see. Biome shares 3-year revenue target. This company, I think, has a really good marketing team, and they like to share information with their shareholders. And yes, I'm looking at you, EZZ Life Sciences. If I had to compare Biome to EZZ Life Sciences, I think EZZ is actually ahead of Biome, but the marketing team at Biome is well ahead of EZZ Life Sciences. Hence, Biome has a larger market, is a little bit more well known as well than EZZ Life Sciences, and significant difference in share price performance today. Biome up 13%. Maybe people are moving their funds from EZZ to Biome. I don't know, but yeah, fair bit of selling in EZZ last week or so on the back of an Appendix 4C where they're operating cash flow positive, about $5 million. Biome is barely operating cash flow positive, barely profitable, but Biome has a significant larger market cap. And that's because, in my opinion, because of the marketing they do. They understand that it's important to get their name out there. And I just like this sort of announcement from Biome. I just wish EZZ Life Science would do this sort of thing. Biome shares 3-year revenue target. I love when companies do that. I love when companies have targets. They have ambitions. They have goals, because that is the way to really drive or motivate employers. And it also keeps the shareholders engaged. They have a target, and we can see how they achieve that target. One of the reasons I really liked Alcidion is because they always release 5-year targets. And I still remember one of their targets they did not meet. They actually ended up short. But who cares? They had a target, ended up short, they put out the new target, and the market loved it. So I love these sort of announcements. They have I think it's a rolling 3-year target, which is a weird way to do it. So a rolling 3-year cumulative revenue of $85 million. So it's a nice target over a 3-year period. So we're talking about by financial year 27 revenue of maybe $30 to $40 million. And yeah, be pretty good if they do that. The last 3 cumulative target was 21 million, and they beat it just 24 million. So you can see the expected growth in this company, that revenue over a rolling 3-month period, so the rate or cumulative 3-month period, will quadruple from 21 million to 85 million. Anyway, so I do like that sort of announcement, and they did release this on the back of a bit of a dip in the share price on the back of, I'd say, underwhelming Appendix 4C. and the share price had fallen a fair bit, and now a nice little bounce. Yeah, so that was, I was waiting for the share price to get to maybe the low 40s, and I would have been interested. Didn't quite get there. So that's Biome. Coming in number one, again, I don't think share price has moved all that much, to be honest. I think it's just the volatility in the share price today. They did a business update, and I'll be honest, it's not a. I don't think it's a. I wouldn't say underwhelming, but it's not. Wow, what an absolute amazing announcement! What a brilliant business update from the company. I'm going to have to buy shares. So definitely not at that point. Continued strong profitability as customers turn to Kogan during cost of living crisis, but you haven't seen much growth. In fact, a few of their sections units have gone down. Looking at You Mighty Ape and Marketplace, so not much growth. In fact, if you look at the total gross sales, actually down, and revenue flat compared to the previous corresponding period. And the main thing I wanted to the main reason this company is number one, it is it's a more well-known company, and the share price has absolutely collapsed, and the share price right now is in a really important support area. So let's have a look at Kogan, and there has been a fair bit of volatility today. So the market hasn't been quite sure how to read this particular update from the company, and the share price is down right now. So overall, negative, but at one point in the day, share price almost got to $5. It's $4.20 now. So those people who bought near the open, more than likely, probably opened or just after opening, got to $5. So those who reacted straight away are probably regretting their choices. So this support zone is this purple box. And the share price over the past year has moved into this box 3 times. The last 2 times it rallied out, and the last rally was really strong, went from $4 all the way up to $8.80. So share price doubled in a fairly short period of time, and then share price pulled all the way back in a fairly short period of time. But let's just have a look at the 5-minute chart. I'd say, it's really interesting. So there was a bit of buying in the first 15 minutes. Share price got to $4.90. And then from about 10:15, they're selling intense. Well, it just exploded. Over a 25-minute period, the share price of this company fell from about $4.85 down to $4.15. So the share price dropped almost 20% in about 20 minutes. I'm not sure what happened. It could have been just one fund manager just selling. That sometimes is all it takes. Share price has found its floor. It definitely has found a floor near the bottom of this purple box. Yeah, almost perfectly. The share price bounced off the bottom of that box at $4.15 at about 10:35 a.m. And each time it gets near to $4.15, share price bounces. Doesn't mean this area will remain support, because share price has remained in this area for a while now, and that weakens the support over time. So Kogan, it's in an interesting area, and it's a sort of announcement where I just went, but the market initially reacted really well, and then that reaction or that positive sentiment died away really quickly. So let's move on to a few other companies. I just want to briefly touch upon Indiana Resources. This is an interesting one. So they're down 10.6%. They received a settlement with Tanzania, and that settlement, they will receive $90 million US dollars from Tanzania. I don't know anything about this dispute. They received or have received $35 million. Will receive $25 million on or before 25th of October 2024, and $30 million on or before 30th of October 2025. It was not exactly what they were looking for. So they were looking for or wanting $109 million. So that's 82.5% of the original amount. Whether they receive all the money is a little bit debatable. Tanzania is not the greatest country in the world. I'm not even sure what this dispute is about. Obviously, they had some sort of project in Tanzania, and Tanzania maybe just took it off them. I don't know. I haven't been following. But my main reason for wanting to look at Indiana Resources is just on how the market reacted, because I saw the share price down 11%. I was like, well, that's interesting. But the share price, again, just like Kogan, opened really high. So the market initially liked it. So last Friday, the share price closed at 8.5 cents, open at 9.5 cents. So its share price was up by over 10% and went to a high of 9.8 cents. So let's just have a look at how the market has reacted. Indiana Resources. Maybe it should be called Tanzania Resources. Yeah, and same thing happened. Almost identical thing happened 18th of July last year. On that particular day, share price actually did increase 75.6%. The share price went to a high of 10 cents, and the share price closed at just over 7 cents. Almost no, it's not identical, but a lot of selling today, which, yeah. And let's have a look at the 5-minute chart, and more than likely, we saw the share price open at the high and selling all through the day. So it's really interesting that share price opened above 10% higher and is now down 10%. So this tells me that I think there's a little bit of disappointment in the market around this particular result and this award to Indiana, and the market might have expected a little bit more. So that's Indiana Resources. Babylon Power and Pump, share price 0.6 cents, up 20%. That's what happens when you get pip trading. Goes up 0.1 cent or 1 pip, and that's a 20% gain. I actually opened up this particular Appendix 4C without knowing the share price of this company, and I saw the numbers and went, oh, this could be an interesting company. And then I saw the share price and I went, no, move on. So I just noticed, even in the highlights section, there's something interesting there. And I just had a look at this, went, receipts of customers, 10.2 million. Operating cash flow, positive, $4 million. Well, technically it's 3.9 million, but we'll say $4 million for the quarter, $7.5 million for the year. The company has, I assumed, a fairly low market cap. Fairly low market cap. Let's have a look. See, market cap is 15 million. I went, oh, hello. Then I saw the share price 0.6 cents, and the company has debt. And the reason we know the company has debt is if you look at the borrowing or the cash flows from financing activities, there's a lot of proceeds from borrowings, repayment for borrowings. I went, oh, this company has a fair bit of debt, I think. So then you go to section 7. Company has $10.2 million of used financing facilities. So the company has a little bit of debt. How much cash do they have? I have a feeling all the cash they generated, they used to pay off debt, which is a smart thing to do. So they don't have much cash. I'm assuming here somewhere. Where is it? No, they don't have any cash. In fact, it's at 367,000. Again, they're using the cash they generate in the business to pay off debt. A very good thing to do. So the company has an enterprise value of $25 million. Share price at 0.6 cents. Not that interested. If the share price was 6 cents, more interested. Again, that just shows you why it's important for companies' management to maintain a share price above 1 cent. Do a consolidation, that sort of thing. Although that doesn't always work. Yes, I'm looking at you, Melodial, ME1. Okay, so, and the other one was Fineos. This video is going a little bit longer than I expected. Fineos, share price actually down. And I thought this was a pretty good Appendix 4C as well. This was another one that I saw the cash flow and I went, oh, really interesting. Fineos, something, it has a market cap of about 500 million, I believe. 550 million maybe. 570 million. And so there's a lot of blue sky already priced into this company. But if they produce this sort of quarter on a continuous basis, I can see some value in this company, even at a market cap of 570, because they were operating cash flow positive, 11.7 million and 20 million so far for the 6 months to date. However, they do capitalize research and development, and they spend a lot of money on research and development. Intellectual property in 1 quarter, $7.6 million, which I do include into the capital expenditure. So the company was free cash flow positive only by about $4 million, but still interesting quarter from this company, but the share price has done absolutely nothing. Okay, so that's what I've got for Appendix 4C's, 5Bs, stocks of the day, that sort of thing. One company chart I just want to show you. This one triggered on my radar last Friday. I think it was on Saturday, actually, when I was looking at some charts. Big River Industries. I did a video on this company recently. Big River There it is, Big River on the June 18th, so not that long ago. And the share price has taken off. Share price increased 9% on Friday and has increased a further 4%. But, and the volume has increased as well. I don't remember if the company has released anything, but yeah, this one triggered just because of this one-day candlestick on Friday. I thought there might be a little bit more interest in the market today, and we have seen that interest. Now let's have a look at a little comment. So this is from Back to the Bush, Australia. You're very critical of Alcidion. Glad it's your opinion. Opinion is spelled with one P, by the way. Stay away from it. It doesn't need to be played with traders like you. This is a case of someone who's getting too emotional with their investments. If my opinion can drive you to write a comment like this, you have to be aware that you're getting a little bit too emotional. And the reason you're getting emotional is because of the Alcidion share price dropping 80% in the last few years because the company's management have not performed. The company has not performed in the last few years. You can just see that by the chart. So this is me being critical of management because they've deserved it. This company has promised a lot over the past few years. So let's have a look at the weekly chart. Share price went to a high of almost 50 cents in 2021. It's been as low as 5 cents. So that's actually a 90% drop in share price. And look at the chart. This tells you all you need to know. The company has not performed. Have a look at the cash receipts revenue of this company over the last 4 years, 5 years. So let's have a look at this particular thing. FinChat. Now, Alcidion. Let's have a look at the revenue. Actually, we'll have a look at the revenue by half year. So the last 4 half years, no growth. There's been no growth in this company, and the company has been loss-making. They're not generating any profit, not generating any cash flow. The company has not hit that inflection point, and that's why the share price keeps on dropping. And I have actually heard Alcidion shareholders say nasty things about the management and this company. So there is a reason why you're getting emotional, because I'd say you've been a long-term shareholder of this company and you've seen your holding or your value of your holding in this company drop 80 to 90% in the last few years, and you're getting emotional. Anyway, and it's free speech. I think, yeah, free speech, yeah, but I think it's very important when you are a bull, obviously you're a bull in this company, to get the opposite opinion, to find the bear case and not ignore it. Don't put your head in the stand when you hear someone critical of a company you own. Actually be very receptive of that bearness or beariness or that bear case. So yeah, so I'm going to give you a thumbs down because you have to learn to seek out the bear case for a company you own. Don't say stuff like, stay away from it. It doesn't need to be played with traders like you. And I wouldn't even trade Alcidion, although share price has sort of rallied on the back of some weak news flows from the company, and the share price could be breaking out. Share price looks like it could be breaking out. So you are going to get some day traders interested in this company just because of what's happening right now. But doesn't mean, with the share price rallying, doesn't mean this company has hit that inflection point. I need proof. Anyway, so the most important thing about this comment is don't ignore, don't be critical of people who have the different opinion than yourself. In fact, if you're very bullish on the company, the best thing you can do is search out for the bear case. You don't want to be completely blind when you hold shares in a company, particularly if you own shares for the long term. That's when you should be seeking out the bear case for a company, because otherwise your opinion on a company is completely one-sided, and that's the worst thing. Now, for Alcidion, right now, my opinion is a little bit one-sided because of the performance of the management and the company over the past 4 or 5 years. Anyway, that's all I have for this particular comment, and that's all I'm going to talk about in today's video. So have a good day, and don't forget, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.